All right, welcome everyone. We're about to take a deep dive into some fascinating stuff. JPMorgan Chase's 2023 annual report,
Yeah, we've got excerpts from everywhere.
like the financial data,
Jamie Dimon's letter to shareholders.
the whole nine yards. It's like getting a backstage pass to the world of high finance.
You know, what really jumps out is just how huge JPMorgan Chase is. I mean, we're talking almost $4 trillion in assets.
4 trillion! Can you even picture that?
Imagine a mountain of money so high it practically reaches the space station. That's the scale we're dealing with here.
Wow, that's a pretty mind-blowing image. And they're not just big in terms of money, they're everywhere. Over 100 countries. Millions of customers.
Everyone from everyday folks to giant corporations, even governments.
It's no surprise they're ranked #1 in so many areas.
Like U.S. retail deposit market share.
Credit card issuance, they're like a financial ecosystem unto themselves.
Speaking of ecosystems, their recent acquisition of First Republic Bank is a perfect example of how they operate. At first glance, it seems like a slam dunk.
Yeah, you see a $3 billion accounting game.
An expected $2 billion annual earnings increase.
But like any big merger, there are always layers, right?
Exactly, and the report actually reveals some hidden costs that aren't immediately obvious. For one thing, a third of those earnings came from deploying excess capital and liquidity, something they could have done without buying First Republic.
So not really a direct result of the acquisition. Interesting. What else?
Well, to handle all the integration, they had to divert 7,600 employees, pulling them away from more future-focused work.
So a trade-off. They did manage to keep most of First Republic customers and saw a 20% deposit increase. But it makes you wonder about the long-term impact. Is this kind of growth sustainable?
That's a good question to consider. And while we're on the topic of expansion, their move into rural America is another interesting piece of this puzzle.
They're already the only bank with branches in all 48 contiguous states, right?
That's right. But their goal is even bigger. They want to be able to serve 50% of each state's population, even in those very rural areas.
Wow, that's ambitious. I read they're planning 500 new branches and 3,500 new employees over the next 3 years. That's a serious commitment.
It really is. And they're working with their corporate responsibility organization on this.
Which suggests they're genuinely trying to focus on inclusive growth in these communities, right?
That's the idea, but it's natural to wonder about the motivations behind such a big move. Are they really becoming part of the fabric of rural America? Or is it more of a strategic play?
Time will tell, I guess. Now let's talk about something that's shaking things up way beyond just the world of finance. Artificial intelligence. JPMorgan Chase is already ahead of the game here.
They have a team of over 2,000 AI and machine learning experts, and they've already got over 400 AI use cases up and running.
Yeah, and what's particularly interesting is how they're exploring something called generative AI or Gen AI.
This goes way beyond just automating tasks. We're talking about machines that can actually create things.
Like, give me an example.
Generating code,
Oh, wow.
writing content, maybe even designing new financial products.
So it's not just about chatbots answering basic questions anymore. This is AI that could completely revolutionize how the bank operates.
From top to bottom, software engineering to customer service. Imagine your bank knows what you need before you even ask.
That's kind of spooky, but also pretty cool. But what about jobs? Does this mean massive layoffs in the future?
That's a real concern, no doubt about it, and one we need to address head on. But JPMorgan Chase keeps stressing that human expertise is still going to be critical. They see AI more as a tool to help people, not replace them.
Okay, that's reassuring. Now, JPMorgan Chase isn't operating in a vacuum. The report also talks about the challenges coming from private markets and those fintech companies. It's a whole different world out there, often with less transparency and regulation.
That raises a huge question. How do we make sure everyone's playing by the same rules?
Right, because JPMorgan Chase is saying banks need the freedom to adapt, make mergers, acquisitions, all that, without being bogged down by regulations. But at the same time, you need some rules to ensure stability.
That's the tightrope walk, finding that balance.
They seem to be calling for a more collaborative approach between banks and regulators, right?
Yeah, streamline things, focus on the risks that really matter, and ultimately make the system work better for everyone.
Makes sense. All right, let's dive into another interesting area, private credit. It's often praised for its speed, its discretion, its flexibility, but are there downsides?
Definitely. While it offers advantages, especially for companies looking to grow without all the scrutiny of public markets, that lack of transparency can also be a breeding ground for problems.
Like, what happens when you have bad actors taking advantage of that?
Exactly. And then what about the impact on the whole market if things go south?
Do you think it's just a matter of time before we see more regulation in this area?
Honestly, it seems inevitable as private credit gets more and more popular. The question is, how do we strike a balance?
Yeah. You don't want to stifle innovation, but you also don't want the Wild West.
Exactly. Finding that middle ground is going to be key.
All right, before we go any further, let's hear what the man at the top has to say. Jamie Dimon's letter to shareholders is always a must-read.
Absolutely. One thing that always stands out is his emphasis on questioning everything, challenging the status quo,
He seems to really encourage debate.
getting different perspectives on the table.
Yeah, which is refreshing because it feels like in so many areas these days, it's all about just going with the flow.
He does acknowledge that there are times when consensus and compromise have their downsides, though.
Like sometimes you got to make a tough call and just move forward.
Exactly. It's about knowing when to deliberate and when to act.
Now, Dimon has some strong views on America's place in the world. He really sees the country as a global leader.
With that unique combination of military strength, economic power, and, core principles.
He really believes there's no substitute for American leadership, especially when it comes to tackling global challenges.
And he's advocating for a pretty comprehensive global economic security strategy, rethinking alliances, making sure trade is fair, pushing back against unfair competition.
It's a bold vision, for sure, but he's also realistic. He gets that a lot of Americans feel like we need to focus on our own problems first, before we go helping everyone else.
It's a common sentiment.
Yeah, how do we balance those competing demands?
Dimon doesn't shy away from the tough questions. He argues that we can and should do both, secure our interests globally while also addressing the issues we're facing here at home.
It's a balancing act, for sure. All right, let's dig into some of those specific domestic concerns that Dimon highlights. Because he doesn't just point out problems, he actually offers solutions.
Absolutely. He gets down to brass tacks, talking about consistent tax policies that make sense.
Yeah, encourage businesses to hire and invest.
Streamlining regulations so they don't stifle innovation.
Being responsible with the federal budget.
And something that really resonates, especially these days, treating all jobs with respect.
Recognizing the value of work no matter what you do. It's a powerful message, especially in a time when so many people feel like they're getting left behind.
It's about creating a sense of shared prosperity, everyone having a chance to contribute and benefit. And for Dimon, that starts with closing the opportunity gap and really instilling a culture that values hard work and personal responsibility.
It's a vision of the American dream that a lot of people can connect with. But how do we actually turn those ideals into real policy changes? That's the million-dollar question.
It's the challenge, and one we'll keep exploring as we continue our deep dive into this report.
We've only just scratched the surface, and there's so much more to uncover.
Join us in part 2, where we'll really get into the financial nuts and bolts.
Break down the numbers, see how those strategic decisions are playing out, and get Dimon's take on the global economic outlook. It's going to be a fascinating ride.
Welcome back to our deep dive into JPMorgan Chase's 2023 annual report. We've talked about their size, their big moves, even gotten a peek inside Jamie Dimon's head. But now, let's get our hands dirty, look at the actual financials.
Right, because size isn't everything, right? How efficient are they? How do their returns stack up against other big banks?
Great point. It's not enough to be big, got to be smart too. And JPMorgan Chase is really good at this. They've got a managed overhead ratio of 54%. Meaning they're keeping costs down, maximizing those profits.
54%? That sounds pretty impressive. How does that compare to, say, Bank of America, Citigroup?
Oh, significantly better. Better than Goldman Sachs, Morgan Stanley, Wells Fargo too. This efficiency means bigger returns for their shareholders, making money and making it well.
Okay, so they're lean and mean, generating solid returns. But remember, 2023 was a wild year for banks. What about their liquidity? Could they handle another crisis?
Absolutely. Their liquidity is rock solid. Think of it like a safety net, but instead of netting, it's $1.4 trillion in high-quality assets.
1.4 trillion. That's a financial fortress, ready for anything. Speaking of which, let's get back to that First Republic Bank acquisition. We talked about some of the complexities, but what are the actual numbers?
Sure. So they paid $67.8 billion for First Republic. Sounds like a lot, right? But they got a whole lot of assets, $192.2 billion worth.
So they got more than they paid for. What kind of assets are we talking about here?
It's a mix. You've got $30.3 billion in securities, then $153.2 billion in loans, and this is interesting, $1.5 billion in core deposit and customer relationship intangibles.
Ah, those customer relationships. Super valuable, and they did keep most of First Republic's customers, like gaining a whole new fan base. Now, what about their support for small businesses, especially in underserved communities? We touched on that earlier, but I'd love to hear more.
Yeah, their commitment to small businesses is impressive, especially those who haven't always had easy access to financing. Last year, they launched this business card special purpose credit program.
How's that going?
They've already provided over 10,900 cards. Total credit line of over $43 million.
So it's not just talk. They're putting their money where their mouth is.
Exactly. And this program is specifically for those underserved entrepreneurs all across the U.S., fostering that inclusive growth, realizing that small businesses are the engine of our economy.
It's good to see a big institution like JPMorgan Chase taking the lead there. Now, this one surprised me. The report mentions their travel platform. I didn't realize they were in the travel business.
It's a newer venture, but they're actually a top 5 consumer leisure travel provider now.
No way.
$10 billion in booked volume last year, 25% increase from the year before.
$10 billion. Wow. Are they aiming to be the next Expedia?
It seems more targeted, focused on that higher-end traveler. They relaunched ChaseTravel.com with over 600 luxury hotels worldwide.
Sure.
It's like a luxury travel ecosystem for their wealthier clients.
Smart move. Use that existing customer base, strong brand to tap into new markets. Got to diversify. Well, let's get back to basics. Their core banking business. How are they doing now?
Dominating. In the U.S., they're #1 in retail deposit market share. That First Republic acquisition just solidified that. They're also the main bank for U.S. small businesses.
So both ends of the spectrum, individuals and small businesses, real pulse on the American economy. Now, their investment banking division. How'd they do in 2023 with all the market ups and downs?
Their investment banking is still the star performer, globally ranked #1, 9.2% market share in a $79 billion industry.
Globally, that's incredible. What's their secret?
Expertise and reach. They're advising on those huge mergers, acquisitions, managing complex offerings, providing sophisticated solutions worldwide. The go-to bank for major players.
Playing in the big leagues. And speaking of global, we can't forget their payments business.
That's a force of nature. $10 trillion processed every single day. Payments in over 120 currencies, 160 countries.
10 trillion a day. That's hard to even fathom. What does that tell us about their role globally?
They're the backbone of global payments, making it smooth and secure for businesses of all sizes to operate across borders, like the oil that keeps the engine of global commerce running.
I like that analogy. Okay, last but not least, their asset and wealth management division. How did they handle all the market volatility last year?
Despite all the ups and downs, they actually attracted even more client assets. Total now is a mind-blowing $5 trillion.
$5 trillion. Investors must really trust them. What's their secret?
It's that combination of trust and expertise. They're known for smart asset management, tailored strategies for all sorts of clients and risk levels. Even when the market's going crazy, clients feel secure.
Steady hand at the helm. Okay, let's go back to Jamie Dimon's letter. Besides his leadership, what does he have to say about decision-making?
He really stresses the importance of a structured process. It's not about making gut decisions, it's about gathering input, having those open debates we talked about, really weighing the options.
So it's being decisive, but informed, thoughtful. He seems to like a mix of intuition and analysis.
And he warns against getting stuck in endless debate, trying to make everyone perfectly happy.
Because sometimes you don't just make the call and go, right.
He gets that. He's all about informed, decisive action. In the fast-paced world of finance, you can't afford to hesitate forever.
It's knowing when to analyze, when to act. Great advice for anyone, not just finance folks. Now, what about Dimon's view on America's role in the world? We talked about him being pro-American leadership.
He really believes in it. Thinks America's blend of strength, economic power, and principles is crucial to tackling global issues. He pushes for that global economic security strategy, strengthening alliances, fair trade, pushing back against unfair competition.
A bold vision. But how do you define fair trade when everyone's got their own interests? And how do we balance being a global leader with fixing problems at home?
Those are the tough questions. Dimon doesn't pretend to have all the answers. He recognizes the need for nuanced strategic thinking. He's not for isolationism, but he's not for blind intervention either.
Finding that sweet spot between leading and protecting our interests. And speaking of interests, let's look at what Dimon has to say about domestic policy. He's got a lot to say about that, too.
Oh, yeah, he's passionate about using good policy to build a strong America. He wants consistent tax policies that help businesses grow and hire, Streamlined regulations, responsible budgeting.
Creating that pro-growth environment, businesses thriving, innovation happening, everyone benefiting.
But he goes deeper than that. He talks about the need to respect all jobs, recognizing the value of work no matter what you do.
Especially important now when so many people feel forgotten.
It's about shared prosperity. For Diamond, that means closing the opportunity gap, promoting hard work and personal responsibility.
Values that resonate with a lot of people. But the report doesn't just focus on the good stuff. What about the risks, the challenges JPMorgan Chase is facing?
Right, they're upfront about the potential headwinds. Things like the changing regulations, cybersecurity threats, geopolitical uncertainty, and of course, climate change.
Let's break those down, one by one. Starting with the regulatory environment. That always seems to be a headache for banks. How are they dealing with that?
They admit it's a burden, all these regulations, expensive and time-consuming, but they're not just complaining. They're working with regulators, pushing for a more streamlined, efficient system.
One that makes sense, right? Protects consumers but doesn't stifle innovation and growth.
Exactly. Finding that right balance is crucial. Now, cybersecurity. With data breaches happening all the time, how are they protecting themselves and their customers? They're taking it very seriously. They're investing a lot in security measures because one breach can be devastating.
It's a constant arms race, isn't it? Banks versus the hackers.
It really is. And they can't afford to lose.
What about all the geopolitical stuff? So much uncertainty in the world these days. How do you plan for that?
They're being proactive. They know things like trade wars, political instability, even conflicts can impact their business, impact the whole global economy. They're watching everything closely, adjusting their strategies as needed.
Got to be adaptable, right? Like navigating a ship through rough seas.
Exactly. And then there's climate change. How is that on their radar?
Yeah, that's a big one.
They're not ignoring it. They see the risks from extreme weather, but also the opportunities from transitioning to a greener economy.
So it's not just about avoiding the bad stuff, it's about finding the good stuff too.
Exactly. They're incorporating climate into their risk management, their investments, supporting that move towards a sustainable future, being responsible stewards of capital, knowing that the planet and the economy are linked.
It's a big picture view. You can't operate in a vacuum. All right, time to crunch some numbers. What are the highlights from their financial statements?
Their balance sheet shows just how strong they are. Ended 2023 with $3.9 trillion in assets, one of the biggest banks in the world by far. Deposits hit $2.6 trillion, showing that people trust them.
Staggering numbers. But what about profits? Are they making enough to justify all this?
Oh, yeah. Their income statement is impressive. Net revenue of $142.9 billion last year. Net income, $48.3 billion, making money consistently, even in a tough economy.
Well done. Proof that their diverse business model is working. They're not putting all their eggs in one basket. Okay, what about their capital position? How healthy are they really?
They ended the year with a Common Equity Tier 1 capital ratio of 14.9%. That's way above what's required. It means they've got a cushion to absorb losses, and they can keep investing in growth, returning money to those shareholders.
They're well prepared for whatever comes next, like having a financial safety net. But it's not just about capital, right? How are they managing all those different risks we talked about?
They've got this comprehensive risk management framework.
Yeah.
Covers everything from credit risk to market risk, operational risk, reputational risk. Whole teams of experts monitoring everything, identifying potential problems, and coming up with solutions.
So it's not just reacting to problems, it's getting ahead of them.
That's the idea. Anticipate, plan, be ready. But risk management isn't just about avoiding the bad stuff. It's about finding opportunities too.
Right. Got to take some risks to grow, to innovate.
They have a really sophisticated system for evaluating those opportunities, weighing the risks and rewards, making sure their decisions align with their goals.
Balancing caution and boldness, knowing that doing nothing can be just as risky as doing too much. Now, let's talk about their investments in technology. Seems like they're really pushing the envelope.
Oh, absolutely. They're not just watching the world change. They're shaping the future of finance, putting a lot of resources into AI, machine learning, blockchain, cloud computing. They see the potential of these technologies to transform the industry.
It's about being ahead of the curve, being the innovators, not the followers. But technology is only part of the story. What about their people? How are they finding and keeping top talent in such a competitive market?
They get it. They know their people are their biggest asset. They've got a whole talent management strategy, attracting top talent, giving them opportunities to grow, fostering a culture of innovation and teamwork.
Creating a place where people can thrive. It's not just about the paycheck. It's about feeling valued, inspired. But even with the best people and the best technology, you can't control the whole world. How are they navigating this crazy global economy?
They're taking a global view, knowing that they're part of a much bigger system. They have teams of economists and analysts watching global trends, spotting risks and opportunities, advising the leadership.
Gotta have your finger on the pulse of the world, right? Understanding how everything's connected. But let's not forget about their impact closer to home.
Yeah, they're committed to being a good corporate citizen. Their success isn't just about profits. It's about making a positive impact. They have a big corporate social responsibility program.
What are they focusing on?
Things like financial literacy, community development, environmental sustainability.
Giving back to the communities they serve. Being a force for good, using their resources to make a difference.
They recognize a responsibility to their employees, their customers, the communities they operate in.
It's not just about the shareholders. It's about a wider circle of people. It's a reminder that business is about people, about creating value for everyone. And that's a wrap for part 2 of our deep dive. We've covered a lot.
Their financial performance, their strategies, risk management, their commitment to social responsibility. We've really gotten a glimpse behind the scenes.
But there's still more to come.
Join us for the final part of our deep dive. We'll be looking ahead, exploring Jamie Dimon's thoughts on the future of finance, what he sees for the global economy, and his advice for navigating the challenges.
We'll also look at what this means for investors, for entrepreneurs, for anyone who wants to make smart financial decisions in today's world. All right, welcome back for the final stretch of our deep dive into JPMorgan Chase's 2023 annual report. We've covered a lot of ground, their financials, their strategies, even Jamie Dimon's perspective. But now, let's look ahead. What's next for this financial giant? And more importantly, what does it mean for all of us?
That's the big question, right? And Dimon himself predicts even more rapid change in the financial landscape, driven by technology. He sees AI and machine learning becoming even more deeply embedded in everything banks do.
So, imagine managing your money, not with spreadsheets and calculators, but with an AI that knows what you want, anticipates your needs, helps you make smarter decisions. It's like having a personal financial guru in your pocket.
That's part of it, for sure, that more personalized digital banking experience. But he also stresses that human expertise is here to stay. Think of it as a team effort. Technology handling the routine stuff, human advisors focusing on strategy, building relationships.
So, technology working for us, not the other way around. But what about all those fintech startups, the tech giants trying to get a piece of the action? How does Dimon see that playing out?
He knows the competition is fierce, predicts that the lines between traditional banking and fintech will blur even more. It's not necessarily a fight to the death, more like a blending of strengths.
So maybe JPMorgan Chase partners with one fintech, acquires another. It's all about adapting, evolving. They seem to be embracing that challenge, not running from it.
Exactly. They're investing in their own tech and looking for partnerships that bring in that fintech agility and innovation. Smart move, recognizing that you don't have to do everything yourself to stay ahead.
Okay, let's zoom out for a minute. What's Dimon's take on the economy here in the U.S. and globally? Because even the most tech-savvy bank can't ignore the market realities.
He's cautiously optimistic about the U.S. economy. He points to our entrepreneurial spirit, our capacity for innovation, our resilient workforce, sees potential for growth, but he's not naive.
What are the potential roadblocks?
He mentions political division, rising inequality, and the national debt. Big issues that could hold us back if we don't tackle them.
Like a car with a powerful engine but a few loose bolts that need tightening. What does he suggest we do?
He's all about a pro-growth agenda. Invest in education, infrastructure, workforce development, reform taxes and regulations to encourage investment, entrepreneurship, job creation. The idea is a rising tide lifts all boats.
Grow the pie, but make sure everyone gets a slice. What about the global picture? Is Dimon as optimistic about that?
He acknowledges the uncertainties, geopolitical tensions, climate change, things that can really disrupt markets, but he also sees opportunity, especially in emerging markets.
So it's a mixed bag, like navigating a ship through calm waters and storms. You got to be ready for both.
Exactly. And Dimon believes that globalization, for all its challenges, has done more good than harm, lifting people out of poverty, creating new markets. It's about understanding how the global economy works, harnessing its power while minimizing the risks.
Okay, but let's bring it back to our listeners. What does all this mean for them, for their personal financial decisions? What are the key takeaways?
Here's what I think. First, never stop learning. The financial world is constantly changing, so staying informed is key to making smart choices.
Don't just set it and forget it. Read, learn, ask questions. Knowledge is power, especially when it comes to your money.
Second, be flexible. Diamond's predictions about finance suggest big changes are coming. Be open to new technologies, new ways to manage your money. Don't be afraid to adapt as things shift.
Embrace change because it's the only constant.
And lastly, think long-term. Diamond talks about building a sustainable business, investing for the future, serving all stakeholders. Same principle applies to your own finances. Plan for the long haul, invest wisely, prioritize your financial well-being, not just today, but for years to come.
It's like planting a tree. You nurture it, give it time, then you get to enjoy the shade and the fruit for years to come. And with that, we've reached the end of our deep dive into JPMorgan Chase's 2023 annual report. We've explored their financials, their strategies, their vision for the future.
We've also looked at the broader economic trends that shape their world and ours.
It's been an incredible journey, and we hope you've learned a lot. Keep exploring these topics, keep asking questions, and make smart decisions that work for you. The world of finance can seem complicated, but with a little knowledge and a lot of curiosity, you can navigate it successfully. Thanks for joining us on this deep dive.